Hi there and welcome once again to Dukascopy TV. I'm Ben Jones bringing you this final edition of Commodities Corner for the week. Joining me on the line to discuss the current state of the copper market is Andrey Kruchenkov from VTB Capital. So Andrey, we've recently seen copper prices fall to a near 4-year low. Most of this is being put down to a slowing demand from China. Can I get your initial reaction to this drop, and can a continued lack of demand from China see the prices drop even further?
Okay, well, first of all, copper is very macro sensitive, and the metal was caught up in a general macro sell-off with emerging markets selling, well, pretty much since earlier this year, on concerns, on fears that Chinese economy is slowing down. Now, we know that the government, the new leadership in China, is trying to diversify the economy, and as opposed to being an export-based economy purely, trying to concentrate on export growth and replace it with domestic consumption, and try and concentrate on domestic consumption while diversifying the whole economy. Now, the infrastructure projects, they still likely to go ahead. We're still going to see the expansion to the power grid, the further urbanization. But naturally, I mean, with the new leadership very keen on pushing sort of newly adopted growth model away from export and infrastructure investment-driven economy, the transition is not going to be easy. And this more consumer-based model is not plain sailing, if you want. And but well, the investors are only naturally very nervous, obviously. And Chinese data has been very volatile. Seasonal slowdown was to be expected, especially in February when the country is pretty much away for 1 week for the Chinese New Year celebrations, for the Lunar New Year celebrations. But, for example, copper imports were quite strong at the start of the year.
Now, are any other base metals seeing a slowdown in demand, or is this slide in the price of copper having any form of knock-on effect?
Well, I think, copper is the most sensitive when it comes to China. Right, because I mean we know that over 40% traditionally the copper is obviously used in construction, in infrastructure. I mean this is the stuff of urbanization. Copper is very sensitive to any news account of China. Now, when it comes to aluminium, the reason, for example, it's very liquid as well, obviously. But the reason the market is, you would argue, range bound since pretty much mid-February. Or even if you look at there's even a wider range if we look 3-4 months ago. But with aluminium, for example, what's happening is that we know that global inventories are huge. The spare capacity is huge. Nobody's expecting aluminium prices to rebound, have a sustained price rally until for another couple of years, because simply there is just too much capacity. There is too much aluminium in the market. LME talks about 5 million. I mean, the global inventory is massive, and that's normal because on aluminium the production cycle is such that it's really hard to reduce the surplus, and once the energy used in it is very expensive. You can't really stop. Once you build a capacity and start producing, it's not as easy to scale back. The cycle is longer, and then, for example, copper slightly longer than the cycle on copper. And what's happening is that the reason the market hasn't done anything is because we sold off significantly. Nobody's expecting anything from the market. The only problem is the warehousing queues, where people can't, for example, in the United States, the spot premium aluminium premiums, the physical premiums, are still relatively high, not because there's shortage in the long run, but because you can't get metal in the short run, and that's kind of keeping a certain flow on the prices, and also because really there is nothing new in the market. We sold off, we're sitting in the range, we're waiting until more producers go offline, we sort of below marginal production costs for many large producers already.
Finally, in longer terms, what else has been affecting the price, and how do you see copper faring over 2014?
You should stabilize somewhere. I mean, it's still heavily reliant on sentiment, but as soon as the second quarter comes, and as soon as fears over China subside to an extent, copper will continue to be very, very seasonal, very, very fundamentally driven, depending on where the spot premiums are, where it's one of those metals that I think that ideally you should rebound in the second quarter. You're not going to go back to highs we've seen in 10, 11, but you will at least try to push back towards potentially 7,000, and stay there depending on how China fares. The key quarters to watch out for will be obviously second quarter, maybe towards the end of the first quarter, traditional activity picks up as well in autumn in China, sort of late summer, early autumn, and that would be a period to watch out for. Naturally, another unknown variable, if you want, is that copper supply is on the rise, and that's something to keep in mind, because on the supply side, generally for the past, it's a bit of generalization, but without going into details, the copper grades were falling. On the supply side, we had causing problems. The metal coming out of Latin America. Even strikes, breakdowns. And the supply chain was always disturbing, and generally because there's massive demand from China. And that's what Australia benefited greatly as well from that.
Andrey, thank you for joining us today. That's all we've got time for, I'm afraid. Tune in tomorrow though, as Dukascopy TV have plenty more updates for you on the final day of the trading week.